Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield Anchor reporter Meghan Grebner, with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Happy Friday, Megan.
It is a happy Friday. It is a big Friday. There should be some celebration. Missouri had some pretty decent widespread rainfall, so that's good news for you all in that part of the country. Today, we're going to talk livestock slaughter. We're going to talk cattle on feed, and we're going to talk cattle inventory numbers. To kick things off, though, let's recap what happened this week in the markets.
Yeah, on the cattle side this week, Megan, we started with really good live cattle prices this week. We're up $3.75. I show an average of a little more, almost $187. That's hard to believe that we're talking about those kinds of prices, but they keep going higher and likely will go higher. In those feeder cattle auctions this week, we were $1 to $4 higher this week. August live cattle futures were down 50 cents. August feeder cattle futures were down 70 cents. We did see corn up this week. It was up 21 cents. On the beef side of the equation, we saw box beef prices down about $6 on the choice side this week. That puts them a little more than $34 above where they were a year ago at this time. Just to remember, it wasn't that many weeks ago, and you and I were talking about box beef price, choice box beef prices running $60 above a year ago levels. Maybe that grilling season has started to wane already in terms of where we're at. On the pork side, cash barrels and gilts were $1.80 higher this week. The August lean hog futures contract was up nearly $5 this week. We also saw gains in the pork cutout value, up nearly $2.90. Very strong bellies this week happening on the pork side of the equation.
Let's take a look at the slaughter numbers for the week. Kind of a pullback really across the board for both beef or cattle and hog slaughter numbers.
Yeah, correct. So USDA is telling us for the week ending July 22nd, a run of 628,000 head of cattle. That is 5,000 head less than where we were a week ago, and 35,000 head less than where we were a year ago. Also a run on the hog side, 2.316, lower than last week, down 12,000 head from where we were last week, but up 21,000 head from where we were a year ago. Now that 21,000 head up is some of the smallest we've been up for a period of time as well.
Let's talk year-to-date cattle slaughter and hog slaughter. How are we running?
Yeah, so now we sit here 3.7% below year-ago levels on the cattle side, and up 1.2% when you look at hog slaughter year-to-date.
All right. So the number that we've been talking about, the one thing we really have been talking about and looking forward to, obviously, is taking a look at these livestock slaughter numbers, specifically watching what's going on with beef cow slaughter in particular. So let's talk these June numbers.
Yeah, so first of all, production in June of 2023 of 2.3 billion pounds of beef. Counterpart on pork, 2.2 billion pounds of pork. So a little more beef than we had on the pork side. Cattle slaughter year for June down 4.7%. To your question about beef cow slaughter, it was down 13.7% on June of this year relative to a year ago. We can start to look at year-to-date numbers and get a little bit of look as well. So total beef production year-to-date down 4%. Yes, those beef cow slaughter was down 11.6%. I keep reminding folks 2022 was a pretty high level of beef cow slaughter. So even though we're lower, I don't think we're down enough to be talking about any kind of real building going on. On the pork side of the equation, hog slaughter was actually down 0.7% in June of 23 relative to June of 22. Year-to-date, hog slaughter again up about 1.7%. Total pork production year-to-date up 0.9%. So we did see lower weights. If you look at the June numbers, June of 23 came in at 211 pounds. That compares to June 22 of 215 pounds. So down almost 2% on hog weights did help us keep pork production down as well.
On the beef cow slaughter numbers, this may be a very simplistic question, but is it also slowing because we're not pulling from such a large pool because we've reduced so much at this point already?
Yeah, so both matter. It's a good point to be made. that when you have a smaller inventory of beef cows, you don't have to slaughter as many in total to get the same kind of effects on the herd itself. So I do think smaller beef cow inventory has been part of the question, or part of the answer to the question about why we down so much. But I'll also say, boy, 2022, loose cows found their way to slaughter.
All right, big report. Two big reports obviously this week, or three if we're going to throw in livestock slaughter to that, but I think all eyes really are kind of watching this July cattle inventory report. Just a reminder, this is the one that comes out twice a year and measures all cattle and calves in the United States. So as we take a look at the numbers, run me through inventory for that.
So for me, the first place I go is beef cow inventory as of July 1. I can hear anecdotally at least a number of different stories as I listen around the country. Some states where maybe grass was actually better than it was a couple of years ago, you could hear the discussion about inventory trying to grow, and other places where it was really dry, inventory trying to shrink. The net of that, I think, was uncertain, yet the report came in 97.4% of a year ago, which to me reminds me that we're still in the liquidation phase. Pre-report midpoint was 97.7, so it came in a little below that, but pretty much where folks thought we were going to be in terms of beef cow inventory. When you look at the beef heifer replacements for the beef side, USDA told us 97.6% of a year ago, so we don't appear to be holding back heifers for replacements when we look at this survey data, and we can talk about what we're seeing on cattle on feed here when we get to cattle on feed report, but don't appear to be holding back heifers to grow the herd. Annual calf crop, 98.1% of a year ago. Again, all of these just continue to remind us that we're downsizing the herd, and we're not to the bottom at this point. Probably sets us up for even further declines between now and the end of the year.
I think there's a lot of interesting numbers in this report. I think that calf crop number is one that I think we'll continue to watch to see how it plays out and what happens. And how much are you watching the beef heifer replacements as we move forward to see what happens and what indications we have in the cattle herd?
Yeah, so I think it is an important piece of the puzzle, and just to remind us of the variability. So pre-report range was 94 to 98.8 in terms of beef replacement heifers. So it just reminds me how big it is. You raise a really good point about calf crop. That came in at the higher end of the range of the pre-report estimates, which reminds me to say we're more productive today than we were last year or than we were 5 years ago. So we don't need the same herd of cows that we once needed to generate a given level of beef production. And I don't want to lose sight of that efficiency gain by the next statement of we're also producing a lot more dairy beef than we might have in the past as well. So all of that matters when we think about total beef production relative to beef cow inventory, at least, but we are becoming more efficient.
And at the same time, we're still restricted by genetics or by science, right? With how fast we could potentially grow the herd.
Yeah, so we're not going to wake up tomorrow and be out of this. And in fact, you and I have talked about this a few times. We're going to at some point have to hold enough females back to grow the herd. And once we make that decision, the hole gets deeper for a period of time until we can talk about the offspring from those females held back being ready to be slaughtered. So there's multiple stages left here. I sometimes argue, we're easily 18, 24 months away from the bottom of production, given where we sit today.
Let's take a look at the cattle on feed numbers, which is always so interesting that these come out at the same time. As you look at cattle on feed July 1, Run me through this latest report.
Yeah, so down 1.8% July 1 inventory relative to a year ago. Continues to remind us that we're struggling to get placements more and more as we look ahead. Now, I will say 2 months here in a row of placements being above year ago levels. I want to be a little cautious because, again, I will say we were seeing pretty low placements last year. I think weather's playing a role here. You have a lot of folks in dry weather areas who are probably trying to wean earlier, get rid of calves earlier than normal. That could be pushing placements higher right now. But placements at 102.7 was right at the upper end of the pre-report range of estimates. So it just tells me that again, I think dry weather probably had a lot of influence here. Now, we also got our quarterly percentage of heifers on feed. It actually went back up this quarter, and we're now sitting at 39.9. So we're a good almost 10 points above where we were when we grew the herd back in 2015, Megan. So there's no indications in the data anywhere in my book that we're talking about growing the national herd. We may be moving that herd around a little bit, given where grass supplies are better, but we're certainly not growing it in total.
I mean, when you take a look at these two reports combined, beef heifer replacements, heifers on feed, how much is profitability going to have to change for producers to feel that they're in a place where we can start growing?
Yeah. Well, we're not there, right? Number one, the cost of,
and it's not prices, right? It's obviously these prices are incredible. So we're at a point where it has to be profitability, right?
So I think that's a big piece of this. So profitability, pasture and forage availability. I mean, this all ties together. But when you see where hay prices are today, so we are at record prices, or in some cases nearing record prices. So it's not like we don't have cattle prices in crazy, well, I shouldn't say crazy territory, but at least high territory. And so I think, it's good to understand that doesn't mean record profitability. I still posit that we could really see a big change in the structure of the cow-calf industry coming through this cycle. Some of what tend to be smaller operations who probably aren't adopting as much of the newer technology just because it's costly, may decide it's time to exit the industry. And what does that industry look like coming out the other side? I have that conversation only because I think that slows the turnaround in building beef cow inventory as well. So perhaps we're at the stage the dairy industry was back in the early 1990s. Well, we'll see whether I'm correct in that guess at this point, but could certainly, again, lengthen how long it takes for us to get some turnaround in cow numbers. That coupled with profitability, that coupled with weather, there's a lot of strikes against building the herd anytime soon.
That's really all of the things that we have today. Maybe not the greatest ray of sunshine this afternoon on this Friday. Let's talk a little drought before I let you go today. Obviously, Missouri is a part of the country where we continue to watch very closely. There's still a lot of red and dark red in the central part of your state. There's been some rains though. Does that help with the mood and the maybe overall optimism that things may get better, at least in the back half of the year if the rains continue?
So I think it has to help. All right. So number one, water availability, I know in some cases was becoming an issue for us sitting here in Missouri. So we haven't gotten rain everywhere, but some of the places we've gotten rain, I think might have helped with refilling ponds at least a little bit. The last thing you like to do is haul water all day long, trying to get water to those cattle. I think if we continue to stay in a better moisture situation, which I think when we see the next drought monitor index, it will show some positive moves for us in Missouri. But we're really probably talking about fall forage growth before we can get too excited about where we sit. But the variability, that's been the thing that's really surprised me. Of this hasn't been a general rain that everyone's gotten. You can go a few miles and find extremely dry conditions still exist from what was an area that has gotten adequate rainfall. I know the east side of Columbia got in excess of 2 inches of rain, and the west side of Columbia got 2/10. That's less than 5 miles from one side to the other. So just a lot of variability.
Scott, next week's report, cold storage. I think demand is going to play a large part in the conversation that you and I have about profitability in both beef and pork and in those industries. What are you looking for next week?
So I'm curious to watch the pork side of this discussion. Meghan, gosh, we were awful negative a month or two ago, and just given another week of strong prices, another week where we're seeing, belly prices recover. Perhaps we are seeing signs that things like Prop 12 were mattering in terms of some of the discussion, but we're a lot tighter and a lot better place than we've been for a while on the pork side. I'm really curious to see whether we get another week under our belts next week with potentially some more positive news.
Scott, always great to see you. We'll talk to you next Friday.
Sounds good, Meghan.
Our weekly livestock market update delivered your email box every Saturday morning. Well, most Saturday mornings. Go to brownfieldagnnews.com. Sometimes it comes a little bit later in the day. Schedules get crazy. Info market updates every day to see what happened in the commodity markets. Check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.